Welcome to Honest Money. I'm really thrilled to have Frugal Local on the show with us again. Frugal, we just want to do a quick introduction to you. For those people that haven't listened to the previous episode, you're a personal finance blogger. Frugal in the best way possible. Someone who tells us how not to spend our money on wasteful things, but how to spend our money on the things that we like. And just to say, thanks very much for coming on the show. Really appreciate it. It's always awesome to have you.
Oh, thank you so much. I have my coffee, so everything is going to be okay.
Coffee makes the world go round, especially in the morning, I guess. So Frugal, you spend quite a bit of time and blog posts on property, and for people that have followed me, they'll know that that's not always my favorite asset class. It's definitely one that I think has benefits. So I thought we should talk about property investing today. It's a meaty subject. Lots of people especially in South Africa have a fixation with property. So I thought if you wanted to tell us how you think people should approach property as an investment, and then we can talk about it after that.
Absolutely. Okay, so there's a couple of ways. I mean, we all know about the strategies. We all know about the buy to let, buy and flip, buy, fix and flip, and we know all about these ways that we can use property to make money. I think the one thing that I find with people is they're like, I want property and I want it now. They don't want to wait. They're like, property is a good investment, so I'm just going to put all my money in this property, and then they get a bad deal. And I find that a little bit sad, actually, because it's like, you basically say, oh, my goodness, you heard on the news the stock is doing really well, so, you're going to put all your money in the stock. Or you heard that the stock is doing really terrible, so you're going to put all your money in the stock. And I found that with property, it's similar, is that property deals, in my opinion, that are actually worth it. It's something worth waiting for. It's you do your research, you check. I quite having a list together. So what I do is I think that you need to have a list together. You need to say, this is what I'm looking for. This is in the area that I'm looking for. And you need to at least check 100 properties in that area to say, what is the norm? What is the expected norm? And how do I know if a property then is undervalued? So for example, if you know the property, the mean is about 800,000 Rand in that area. If you get something for 500,000 or 600,000 Rand, that might be a good deal. The problem is that people just go like, a property is a good investment. Oh, this one is for 950,000, and then they buy it. And then only afterwards do they actually find out it's a really, really bad deal. I personally like buy to rent. I buy the property, I rent it out. And what I do is I work with a 1% rental factor. So I prefer having a 1% rental factor per month. So that means if I paid 400,000 Rand for a property, I want 4,000 Rand a month in my pocket after the rates, taxes and levies and those monthly running costs comes off. And I've heard people that tell me, oh my goodness, that's not possible. But I do think that it is possible. It is definitely possible. And I've had people tell me that this is possible. And then basically what you want property to actually, like that the tenant actually covers all your costs for you. That is ideally what you would want.
Okay. So I guess one of the things around doing a buy to rent property will be debt and how I'd like to talk about a little bit about that, because to me debt is something that could be a weapon of wealth destruction as easily as it could be something that helps you get yourself to the point of financial freedom. So if you found that property that can pay you the rent after costs, what's your view on debt? How much debt should someone take on board? What are the things they should be careful of? When should they get excited? I'm always scared of debt. I hate owing the bank money. Even if there is a tenant paying off a property, I feel like the bank's got me somewhere. So how do you approach that?
Okay, this is a very interesting question. So I think there's good debt and bad debt. And I don't like the idea of me having to pay off debt. I like if somebody else pays it off for me, because then I can use my money for other things. What I find extremely important, and I've found it so important, I wrote a blog post about it, is that you need an emergency fund for your properties. Remember, you might not actually technically need it. Because your tenant is paying it all for you. But things happen, things happen, like, for example, you need to spend a little bit of money on the property with regards to a tenant that broke the stove. I recently had one. Luckily, the deposit actually covered it. But I do think that the main thing for me is that you should not put yourself in a situation where you can become extremely vulnerable. So what I do is I can extend a lot further than what I am right now. I can buy a lot more properties, but I don't like to because for safety reasons. So I'd rather have a little bit more cash flow, a little bit more in a property emergency fund, not just your normal I lose my job emergency fund, but a property emergency fund in case something happens there, just to cover yourself quite a bit. I do understand that a lot of people don't like the idea of good debt and bad debt, and I think it's a tool that you can use if you understand it. If you don't understand it, stay away. It's definitely not worth it for people that doesn't have that management. I don't want to say management ability, but like that level of control. Property is something that people need. You want control over your life. You want control over what you invest in. And the reason I say that is because I find that people, what they do, people hand over their money to financial advisors, to companies, to ETFs and all these things. And they say, you go and make me more money, babies. The problem is that they don't know what they're doing. And oftentimes these people invest in pyramid schemes and things like that. So I think property is a very hands-on thing. And if you really want to know, and it's the same with the debt, you need to be hands-on. You need to be so involved. And I don't think it's a bad thing, though.
Okay, fair enough. I think I think what I'm taking out of this, which is the point I agree with, is you shouldn't view a property investment as a very passive thing that you just buy and forget. If you're going to make, especially buy to rent property investments, you need to view it as a proper side hustle. It's a business. It just happens to be a business that's in property, and using debt and managing tenants and the like is something that you should view as part of your side hustle. It's something that's going to take work. It's something that you're going to spend a lot of time on. Yes, it'll make you money, but I think the critical point there is if you've got debt, make sure it's a small amount of debt relative to what you can afford, so that when life happens, because living in a post-COVID world, we know life can happen at the worst possible time. And secondly, have a property emergency fund. I agree. What I wanted to I didn't want to butt in, but if you say a property emergency fund, how many months? How do you calculate that? What's the number that people should have in mind?
I personally quite like 3 to 6 months of all your properties rent, but I think 3 months is normally, if you've got, depending on how many properties you have, if you only have one or two, it's the same with diversification. So then you might need just 3 months, or then you might need a little bit more. I quite like the 3 months mark, but if you've got a very, very large emergency fund already, just on top of that, I just keep that in one of my bonds, or in my
I think it's a great point. I think, so if you're saying to someone that's going into this 3 months, let's say 3 months worth of rent after costs per property, I think that's a great call. And then I think, I think the other point there is you're going to have to do the homework properly in every aspect. It's not just on the debt. It's homework on the property area that you want to buy, and then the diversification is an important point there. I think for me, one of the things I'm always scared of with investments is that people kind of bet their whole future on one thing, whether it's one share, one company, one property. And I think if you're going to do this, yes, you're probably going to have to start with one. We all start somewhere, but the point is, as quickly as possible, get to the point where you've got at least two sources of rental income, so that you're always going to find one day somewhere along the line one tenant won't be paying. And at least then you've got two different properties and one tenant between two while you adapt and recover. And I think the point I'll obviously I'm going to be scared of you saying financial advisors put money into pyramid schemes. I hope not. I hope that's a limited number. But I think I'll say the same about property agents. Don't just trust any property agent and what they tell you. Do your homework. The internet's a wonderful thing now. It gives you so much information for free around properties and the properties in an area that you can do your homework. And if you need to use an agent, you're doing it as an informed investor, not as kind of a blind passenger.
Absolutely. And I think this is the key part here, is that everybody wants your money. Everybody. The financial advisors, the real estate agents, the bond and transfer attorneys, everybody wants your money. And it's okay. But it's worth negotiating on that. And I think even for a financial advisor, if they're asking you a fee of your entire fund value, in the same way with property, you go to your transfer attorney, your bond attorney, you negotiate the purchase price of your property, the interest rate, you negotiate these things. And I think that's the important takeaway from that is that don't just settle and don't just take it, negotiate, work with what you have.
So I think we're running out of time, and I really want to find out from you if there's one thing you could tell people about money, about the world of investing. What would that thing be? What would be the thing that you tell yourself on the day you kind of set out on the world of money? If you could find out now, what would it be?
Spend money on the things that's important, but don't spend too much
nice
money.
And simple.
Because if you do, tomorrow it might not be important anymore.
Brilliant.
Awesome.
Well, Frugal, it's been wonderful having you on the show. I really appreciate it. For those of you that want to find out more from someone who's not in the game of selling you stuff, he's just there to try and share his journey to financial freedom with you. Follow him, Frugal Local, and Frugal. Once again, really great to have you on the show.
Awesome. Thanks for having me.
Thank you for listening to Honest Money. If you have any questions, you're welcome to reach out to me on Twitter. My handle is @WarrenIngram. Don't forget to subscribe. We're on Spotify and Apple Podcast. Chat soon.